You're sitting on the beach, not a care in the world, getting paid the rest of your life for doing absolutely nothing. Doesn't that sound nice? Well, you can have that. Anyone can have that. It happens to people all over the world. And no, this isn't one of those lame self-help seminars where I teach you how to explore your inner self or something like that. I'm talking about dividend investing. That's right, dividend investing. It's become very popular online as a form of investing, especially appealing to those who want consistent income. And simply put, dividend investing can make you rich. So what is dividend investing? What even is a dividend and why should you care? Well, in this video, I'm going to tell you exactly what a dividend is and how it can make you lots and lots of money if you have enough time. My name is Kevin Conway. I make personal finance videos like this one all the time. I talk about investing, real estate, financial products, and I always give my honest take. I'm always clear and transparent with you. So if you like that sort of thing, be sure to subscribe to the channel and check my other videos out and give a like to this video. Just a quick like really means the absolute world to me. Now let's jump right into it. So first off, what is a dividend? Well, a dividend is a payment that a company pays to its shareholders based on a portion of the company's profit. Typically, these companies are publicly traded, and typically the dividend is paid on a quarterly basis, that is every 3 months. Why do companies like to pay these dividends to these shareholders? Well, all a shareholder really is in a company is the owner of the company. Who are the owners? The shareholders. If you own stock and you are a owner of those shares, you are an owner of the company, and therefore, whenever a company makes profit, part of that can go right to you as the owner if the board of directors elects to pay a dividend. Now, not every company pays a dividend. For example, Tesla doesn't pay a dividend, but Apple does pay a dividend. Now, why is that the case? Well, like I said, the board of directors has to approve the dividend payout. And what is a dividend? It's simply a portion of the company's profits. So if a company needs those profits in order to fuel its growth, it's not going to make sense to pay them out as dividends. That's why growth companies typically don't pay dividends like Tesla, because Tesla needs that money in order to build factories, do new R&D, and it needs all the money it can get because it's growing rapidly. Whereas a more mature company like Apple, a company that's been around for quite a while and makes so much money it simply doesn't know what to do with it, those are the companies that typically pay dividends. You could think of dividend players as slower growth, more mature companies, companies like Johnson & Johnson, Chevron, Apple, and those sorts of firms. Now, just because a company doesn't pay a dividend doesn't mean it's not worth owning. For example, Tesla is growing a lot, which means the value of their company is growing a lot, which means if you own that stock, which is again a share of the value, and the value goes up, your stock price is going to go up. So you're going to make money off of the increase in stock price as opposed to the payment from the company in the form of a dividend. Now, how much in dividends do these companies pay in the first place? Well, like I said, they pay typically a portion of their profit, not all of the profit. And on a per share basis, that works out to be between 1 and 4% for most shares that pay dividends out there that are in a healthy state. This percent, also known as the dividend yield, is calculated as follows: whatever the payments that the company makes on an annual basis to its shareholders divided by its current share price. So if a company's share price is $100 and it pays out $2 per year in dividends, or 50 cents per quarter, the dividend yield would be 2%. That is $2 divided by the share price of $100. Okay, so maybe 2% doesn't excite you so much, but let me tell you why it should. First off, this dividend income is not the only return that you're going to see. Like I said, the stock price itself could go up in value, or the company could increase its dividend payouts over time. So it may be $2 per $100 share price today, maybe it'll be $3 5 years from now. And the coolest thing is you don't have to sell any of your shares in order to get this return. It literally just comes into your brokerage account from the company. And secondly, if you reinvest the dividends, that is, if the company pays you a dividend and you immediately take it and automatically buy more shares, you're going to see substantial compounded returns over time. Let me tell you about one of the most mind-blowing statistics that you will ever hear. According to the Little Book of Common Sense Investing by Jack Bogle, the founder of Vanguard, one of the most prominent investing firms out there, listen to this. He writes, dividends made a contribution to the market's appreciation that is almost beyond belief. Excluding dividend income, an investment of $10,000 in the S&P 500 on January 1st, 1926 would have grown to more than $1.7 million in 2017. Now you may be thinking, that's pretty cool. The value of the stock grew so much from $10,000 to $1.7 million and paid dividends that whole time that you could have lived off. But listen to this, if you were to take those dividends during that time period and instead of living off of them, simply reinvested them into the index fund, here's what you would have had. $59.1 million. Yes, that's right, $1.7 million if you were to take the dividends and go spend them, or $59 million if you were to reinvest those dividends. Now, how could that possibly be the case? Well, it's because of something called compound interest, one of the wonders of the world. So it's not rocket science, but when you get paid the dividend, imagine that you go and purchase more shares. Now, what does that actually do? It means that you are now entitled to even more dividend income in the future because now you own more shares. Therefore, the next time you get paid dividends, you're going to get a little bit more money, which then you will turn around and reinvest in the company, buying you even more shares. So on and so forth. It'll compound over time because not only is your original investment going to be paying you dividends, your dividends are now going to be also paying you dividends. Okay, maybe to me because I'm a nerd, but I think it is cool to have $59 million. Now, before you jump in and search for the highest yielding company out there to pay you the most in dividends on a percentage basis, there are a few things you should know about dividend investing before you jump right into it. Number one, the highest dividend yield is not always the best dividend stock to purchase. How could this be? Wouldn't it be the case that if I had a really high yielding company, that would certainly pay me more money than a company that didn't yield as much money? Well, the problem is oftentimes the dividend yields are based upon what has occurred in the past, not what is going to occur in the future. Remember how we said a dividend is merely cash paid to shareholders from profits of the company, and that a dividend yield is merely a percentage divided by the current share price? Well, you could see how if the share price fell off a cliff and you were basing the dividend yield off of what the company had paid in the past, that you would be left with a really high dividend yield. But if the stock price fell off a cliff, it's probably because shareholders and traders are expecting the dividend to either be cut, reduced, or the company's prospects in the future would fall off a cliff. That is how you get a lot of really high yielding companies that don't actually pay out the dividend that you think they would have in the first place. What you want to find are companies that have safe, secure, stable cash flows that have a healthy dividend payout ratio. For example, companies like Johnson & Johnson, Costco, these are healthy, stable companies that are going to be earning a lot of money in the future and are going to be able to pay their shareholders. Their payout ratio is pretty low. It is not going to be 100% of all of their profits because they don't want to take that risk. What happens if they don't have as good a year this year? They don't want to have to cut their dividend. A good rule of thumb is if a company is yielding between 1 and 4%, that is probably going to be a healthy company to invest in. Now, of course, you're going to want to do your research on the company to make sure that nothing has materially changed and that their payout ratio is low enough to be secure. Okay, number two, you want to be sure that you reinvest your dividends for the reasons that we talked about earlier. The compounded effect of reinvesting your dividends is going to leave you with a lot more money in the future. Now, I know that everyone wants to sit on a beach and get paid for doing absolutely nothing. And trust me, you will get there, but you'll get there a lot faster if you reinvest your dividends today. That way, in the future, you're going to have not only your original investment, but your dividends paying you dividends. And number 3, you don't want to put all of your eggs in one basket. I feel like a broken record in saying this, but it honestly is one of the most important lessons in investing. That is diversification. You don't want to put all of your eggs in one basket just because the company today is paying a good, healthy dividend, because you never know what will happen to that one particular company. The best thing to do is to buy an index fund comprised of a whole host of different companies that pay dividends. Therefore, you're not ever hooking your future to one ship. You never know what's going to happen to any particular company, even companies that seem like they're going to be paying dividends long into the future. I personally love VTI, the Vanguard Total Stock Market Index Fund offered by Vanguard. The ticker symbol is VTI, which you could find on basically any brokerage, which will allow you to get exposure to around 3,600 different companies, all the major companies that you've heard of, most of whom pay dividends, some of whom do not, but it is going to be the case. I'm going to get broad-based exposure, and I'm not going to be suffering the risk of any one of those companies going to zero and wiping out my financial future. So with all of that being said, it isn't the case that only dividend stocks are great stocks for the reasons that we covered earlier, but it is the case that dividend investing can lead to substantial wealth over time, especially if you reinvest those dividends. To top it all off, dividends are actually tax favored. That is, taxed at a lower rate than the income that you would earn from your job. Now, why is that? Has to do with a lot of different things, but suffice it to say that the companies that pay these are corporations, and they already have paid taxes on that money, and then they pay to you, the shareholder. So it's double taxation, which is why they're able to have a lower tax rate. But the key takeaway is that you're going to be receiving checks that are going to be tax favored as opposed to going and working for that money. So it turns out that sitting on the beach and getting paid is actually a little bit more tax advantageous than going and working for that money. Strange, but that's how it is. So what do you guys think of dividend investing? Is it a strategy that you're going to employ? I personally have a whole host of dividend stocks, and I have a video series which I just launched called My Passive Income Portfolio, where I detail my passive income growth month by month by month, and I'm transparent. And one of the core features is dividend stocks because they offer me steady income from broad-based exposure of companies that I personally wouldn't be able to go and personally buy. I can't go buy Costco, so I buy Costco stock. That is how I view my dividend portfolio. It's a key piece to my financial future. Let me know what kind of dividend stocks that you guys are buying. Comment below. I really want to know what is the #1 stock that you would recommend to somebody. If you like this sort of video, be sure to give it a like, check out my other videos, and subscribe to the channel. I'll see you next time. Thanks.